Investing in dividend stocks can be a strategy to generate regular income from your investments. Here are some steps to consider when investing in dividend stocks. Research and select dividend-paying companies. Identify companies that have a history of paying consistent dividends. Look for companies with a solid track record of dividend growth, stable earnings, and strong financials. Evaluate dividend yield. Consider the dividend yield, which is the annual dividend payment as a percentage of the stock price. A higher dividend yield indicates a higher potential income from your investment, but be cautious of extremely high yields, as they could be a sign of financial instability. Assess dividend sustainability. Examine the company's ability to sustain its dividend payments. Look at factors such as earnings growth, cash flow, payout ratio, and the company's dividend history. Diversify your portfolio. Spread your investments across different dividend-paying stocks to reduce risk. Diversification helps mitigate the impact of any single company's performance on your overall portfolio. Reinvest dividends. Consider enrolling in a dividend reinvestment plan offered by some companies. DRIP allows you to automatically reinvest the dividends you receive to purchase additional shares, compounding your investment over time. Monitor and review. Keep track of the performance and news of the companies in which you've invested. Stay informed about any changes in dividend policies, financial health, and industry trends. Consider tax implications. Understand the tax implications of dividend income in your jurisdiction. Dividends may be subject to different tax rates, and it's important to factor in any tax obligations when evaluating the potential returns. Seek professional advice. If you're unsure about investing in dividend stocks, consider consulting with a financial advisor who can provide guidance tailored to your financial goals and risk tolerance.